Liquefied natural gas. What's its role in the European gas scene? Well, joining me to discuss is Dr. Thierry Bros of Societe Generale, Senior Analyst of European Gas and LNG. Welcome, Thierry.
Thank you.
So with more than 50% of the market share in Europe, Norway and Russia have essentially, well, technically more power in the European gas markets than compared to OPEC in the oil markets. So with that in mind, with the current geopolitical situation in Ukraine still tense, how has this affected the European gas scene?
Yes, you're absolutely right. I mean, there is an oligopoly in Europe. Norway and Russia owns more and manage more than 50% of the total demand. And so therefore, they have the ability more or less to set prices. And what we've always said is if they manage to set prices in a total that is above $5 per million BTU and below something like $9 per million BTU, the oligopoly will stay, i.e. no one can come in and they will still make good money. So this is a maximization of the rent. Then your second question about Ukraine. Well, if you look at what's happening nowadays, as we are speaking, we are in fact facing something with Russia, Europe, and Ukraine, which could be viewed as a ménage à trois, with those three having different views. Russia doesn't want gas to transit via Ukraine any longer. Ukraine wants Russian gas to transit via Ukraine to Turkey and Europe because it makes money, but doesn't want any Russian gas. Okay, so with those two issues, we are right now in a situation quite tense. Gas is still going through Ukraine, but maybe in 2020 we could have this transit contract, which is a Russian transit contract for Russian gas to Europe or to Turkey via Ukraine, may not be renewed. So we could face some kind of issues later in 2020. Not now, we haven't seen anything right now, but later this could happen.
Something to look out for. So European reloading of LNG is set to fall as the low Asian prices are kind of removing the incentive to re-export the fuel. So what effect will this have on the market?
Absolutely right. What we are seeing right now is in the last 2 years, we've seen some LNG going into Europe because this was a destination. This LNG had to move into Europe because of contractual obligation, but then because of much higher Asian prices, and this was linked to the Fukushima disaster and the fact that the Japanese needed more LNG and to the growth in China, this LNG was reloaded and sent with a high profit into Asia. Today, with oil prices going down, LNG prices in Asia is oil-linked or the spot level is also low. So this will stay in Europe. There won't be any reload, or there will be very, very little reload in 2015. And so this means that we have mechanically more gas available. And the interesting part is this more gas can help us either to mitigate a kind of crisis if we have one in Russia or via Ukraine that you were mentioning earlier, but also, interestingly enough, it could help us to mitigate what just happened back yesterday or the day before, which is the fact that the Dutch have decided to produce less gas. So it gives us some more freedom, more security of supply, because we are going to have extra gas in a very short term in 2015.
So does liquefied natural gas have the potential to rescue Europe?
Here, for 2015, not very much, a little bit, but again, it has an impact on prices, and this is why I'm more bearish than the market for 2015 summer prices. But in the longer term, if we think at how much new projects are going to come, there could be too much project coming from the US. The news flow is US LNG. And if we have too much US LNG, then yes, this LNG will have to find a place in 2020, and this LNG may find its place in Europe. And here we have two options. Either we are in a place where there is a price war between the Russian and the US because Russia wants its pipe gas to stay and to keep its market share, and US need to dump its LNG into Europe, and we will have much lower prices. Or, back to what I was mentioning earlier, if we have if Russia has not renewed its Ukrainian transit contract, then this US LNG will help us to balance our demand in 2020. So an interesting element. I mean, you could end up saying, well, US LNG may be perhaps an expensive bet, but it's also perhaps a rational hedge if we have this no renewing of the Russian transit contract in Ukraine.
It certainly is an interesting time in the markets for LNG. Thank you so much for joining me today, Thierry.
Thank you, Sinead, for inviting me tonight.
Well, that's all from Thierry and myself for now. Thanks for tuning in, and remember to keep clicking back to Dukascopy TV. Bye for now.